There's a group of people that I want to convey a message to. In fact, it's not a group, it's probably most everyone. We all dislike paying taxes. And it's so apparent when it comes to any asset that you have purchased that has a low basis, right? What do we tend to say if it's in the stock market? I can't sell those stocks. Those stocks I bought 40 years ago. The returns are incredible. Do you know the tax bill I'm going to have if I sell it? Or, I bought art many years ago. Never in my wildest dreams did I imagine the appreciation. I can't get out of this. I am stuck. The only saving grace is for me to actually pass away with it. Because if I do, we have all been taught that we get a step up in basis, so we don't have to worry about the taxes. Well, I come from a different school of thought. I was always taught that if I have more than what I started with, that's a good thing. And if it takes having to pay something to actually get control of it, to take it, to covet it, to hold it in my arms, that was okay too. Now I know we don't like paying taxes, but let me share something with you. Years ago I had a lovely couple that came in. They were teachers in the New York school system, and then became principals. And in their heyday, I believe were making somewhere in the neighborhood of $125,000 combined. But this was during the times when, if many of you recall, a gentleman by the name of Schenker, I believe it was Albert Schenker, who was running the retirement plans for all the city workers in New York. I believe it was under his control, and how the markets were doing incredible, and they were putting their retirement dollars in this, and people made a fortune. So I had this couple come to me, and they said, you know, it's amazing. We never made a lot of money, but we've amassed $15 million. Well, after I picked myself up off the floor saying, that is just unbelievable to me, and they all said it was due to this gentleman who did this for New York City employees, they said, we don't need a lot to live on. We never had a lot to live on, but we love the idea that we have all this money. And we do not like the idea that we're going to have to pay tax, number one, when we die, not to mention the amount of income tax that I'm going to have to pay now during my lifetime. And I said to him, there's one other thing that you don't like, and you haven't voiced it. And he said, what's that? I said, that's the fact that the amount of tax, of income tax, that you will start to pay when you're required to distribute your money is greater than the income you ever made during your lifetime. And he and his wife looked at me and said, you're absolutely right. We never even thought about it like that. I said, so that's enough to make you sick to your stomach? He says, absolutely. So we went into underwriting to purchase the insurance, and we were buying $5 million of insurance. Well, sure enough, as time went on, there was a major crash in the market. They came back in devastated. They said, Howard, we don't believe we can continue with the purchase of this insurance. And I said, why? He says, it's too embarrassing to say. The 15 million that we had is down to 8. We cannot afford this. I said, okay. So therefore, we're just going to say goodbye 7 million, and you're going to sell all your stock right now. Oh no, I couldn't do that. Oh, why? Well, because if I do you realize the tax we're going to pay? It's like, but you just experienced losing $7 million. So let me tell you what's going to happen. I want you to continue with the insurance. Out of your $8 million that's left, we know you only need $125 a year to live on. We know that you can easily make 5% a year. I need from you $75,000 a year, which I want you to take out from your account, $125 a year, so you could pay your taxes, be left with 75, or maybe it's $115,000 a year. Pay your income tax. I know you don't like it, but you know what I'm going to do with that 75? We're going to recreate 5 of the 8 million that you lost, that you so were willing to let go. You see, we all need to rationalize in our minds. There's nobody on this planet that can be worth $15 million and within a matter of days have it drop to 8 million and say, that's okay. We need to rationalize this. So your rationale was, you know what? It's not our money. It's the children's and grandchildren's money. And I buy into that philosophy because you're right. This extra 7 million wasn't going to make you live any better or worse. You were never touching it. So it really is your children and grandchildren's money. But as much as you've deferred the importance of losing that money is how much you stick with the ideology that I can't get out of anything because I'm trapped due to taxes. But by releasing some of that money and paying some of that tax, do you see how I just recreated for you the 5 million out of 8 that you lost? Now, if you don't do my program, this is what's going to happen. And I can't read into a crystal ball. I can only go from experience and being around for quite some time. And that is that your 8 million you won't sell. It's going to go down to 7, to 6. Then it's going to bounce back up to 8. And you're thinking, oh, this is it. It's going. And then it's going to go drop to 6 again. And you're not going to have the stomach because you see, as we get older, our level of patience, our level of being able to brush things off goes away. We don't have the stomach that we once had when we were younger, knowing that we can recreate it, remake it. So you're going to end up selling ultimately at 5.5 or 6 million. And then you're going to rationalize again that again it's okay. Mother and I have enough money to live the rest of our lives. It was just you kids that got hurt a little, but we're okay. When you could have the conversation that says, kids, we took a little too much risk, but you know what we did at the end of the day? We were able to recreate 5 million of the 7 that we lost, and we've learned our lesson, and we're going to be a little bit more conservative, but this family is going to end up net with 12, 13 million, and wow, what an accomplishment. Ladies and gentlemen, don't be concerned so much with what taxes are going to have to be paid in order for you to create the end result that is most fitting for your family's situation. It's always good to pay tax if it allows me to make more for the ultimate legacy. Now, I can get into so many different discussions about this. Let's talk about art for a minute, shall we? I'll never forget with my father going to this gentleman's home, and of course this is not the norm, but had a tremendous art collection. I mean, when I say a tremendous, we must have been looking at $250 million worth of art on the walls. And we said to him, what are you going to do when you pass away? You know, these aren't pieces of art that you can just take off the wall and give to your children. The IRS knows about this art. It's insured, number one. It's documented. These are major pieces, and the government's going to want their fair share. How are you going to pay for it? Because I know you don't want to sell this art, especially in a fire sale, to get the money to pay the tax. You want your children to have the art. He said, absolutely. we came up with an idea. We said you have $250 million. Let's start with $100 million. They were around 70 years of age. My father goes to this one piece on the wall and says, "This is unbelievable. What is this?" And he says, "It's a Picasso." "What is something like this worth?" He says, $20 million. He said, "I got an idea. I want you to take this $20 million piece of art. Let's sell it. Yes, you're going to have to pay some tax. I know that's why you don't sell any of your art, but that's really not true. You don't sell it because you love having the collection. I'm going to sell it. I'm going to pay some tax. And with the balance of that money, because you paid quite a bit for it, we're going to take it and buy a $100 million life insurance policy. And then you know what I'm going to do? I'm going to frame it. And it's going to say, pay to the order of so-and-so's children $100 million. And then I'm going to stick it back up on the wall where the Picasso was. And now, when you have your friends come over to look at this unbelievable art collection, tell me what piece of art they're going to be most enamored with. They'll be looking at your Van Goghs and your Picassos and your Chagalls and everything else. And then they're going to come across this one that says, 100 million, what kind of piece of art is this? And you were able to create it by taking one piece off the wall and replacing it with this life insurance policy. And guess what? When the ultimate day comes that you and your spouse pass away, your children will be able to come to this wall and take that picture off the wall, tear it apart, take the policy out, and turn it in to that life insurance company for $100 million, allowing them to leave every other piece of art intact. Think about that for a moment. And do we really care about minimizing tax or creating the best way of leaving an entire collection to the family that you love so much?